katoa. Welcome, Territory 3 community. Very excited to be bringing you another Territory 3 Academy webinar with thanks to our sponsors, New Zealand Trade Enterprise, Amazon Web Services, Bank of New Zealand, and of course K1W1 Vendor Management, Jasmine Holdings. Very, very pleased to have Evan Cummack here with us today, all the way from the USA. Evan and I have toured the country in a Kiwi landing pad jam a few years ago, and certainly tried to catch up pretty regularly in San Francisco. Fascinating transition for a good Kiwi boy from, I think, the Kapiti Coast, but he'll tell you more about that later, to the world of Silicon Valley. And now leading a very exciting company, Finn, as CEO. So welcome, Evan. Good to see you, mate.
Hey, good to see you, mate. How are you?
Very, very well. Thought I'd just kick off for the crowd and just a little bit of housekeeping, folks. Most of you have been on one of these before, but if you want to ask a question, if you can direct them into the Zoom Q&A rather than the chat, and that just makes sure that we'll get through that at about the 30-minute time frame, and then we'll do another break for Q&A about 10 minutes before we finish at 11 o'clock NZT. So yeah, fire those questions in. There's lots to cover here. So Evan, tell us a little bit about yourself. I see you've got your lovely dog sitting in the corner there, being very well behaved.
Yeah, so my name's Evan, like you mentioned. I'm CEO of a company called Fin, which is F-I-N. Our domain name is fin.com. We have, that was actually, I don't take many recruiter calls, but when I saw the domain name, I was like, holy shit, these people have a 3-letter domain name. So I actually took a call with them, and the rest is history. But yeah, I'm CEO of Fin. Fin is a B2B SaaS company. We can get into that throughout the call, but we raised our Series A very soon after I joined in December of last year, $20 million US, so about 30 million New Zealand dollars, which is normally a fairly significant A round, but I feel as though the financing is completely out of control right now. So compared to a year ago, the numbers are all very different. And yeah, I'm here actually in Phoenix, Arizona, which is not where I live. I live in Lake Tahoe, North Lake Tahoe, California, about 3 hours from San Francisco. Been up there since the beginning of lockdown. And prior to that, as you mentioned, I spent 10 years living in San Francisco, worked for a company called Twilio that people may know. Twilio is not as big in APAC as it is in North America and Europe, I would say. Don't quote me on that. And it's essentially again an enterprise technology company, one of the first real multi-tenant cloud developer platform companies. We were focused on communications and providing communications primitives and tools through APIs in the cloud. And I joined there actually around about the same stage, maybe a little earlier than where Fin is now, and rode that out for 10 years. It was amazing. It's one of the, it's a once in a decade kind of company. I remember, the first day when I realized that we were worth more on the stock exchange than Ford Motor Company, and just sort of like trying to wrap my brain around that. But it was certainly a wild ride, and ended up there as a general manager. Actually started my own business unit there a couple of years ago, but it was amazing.
Very cool, very cool. And that product management journey that you've had is one we've talked about a lot, and one I'm passionate about, getting back more learnings into the New Zealand community. I mean, if you had a sort of a postage stamp list around product management today versus where you want to see it, or the key things, what would those be?
It's interesting. This is for folks on the call, I did the Kiwi landing pad tour. I can't remember what it was called.
The jam, sales and marketing jam.
The jams. Yeah, the jams. And I was there speaking about product management. And one of the things that I think I missed the mark on, based on my assumptions, like coming out of having spent at that time about 7 or 8 years in Silicon Valley, was the difference between like being a product manager and product management. And I think I was coming at it from, what does it mean to be a product manager, which is, it's a valid angle to come at it from. But I think like what I realized, talking to a lot of people in New Zealand, is actually the idea of having that role is quite, I don't want to say novel, but it comes quite late for a lot of companies. And actually what people were really curious about was just product management. Like, you know, as the CEO, how do I ensure that I'm building the right product and these types of things. And yeah, it took me like a year until after that tour to realize like, oh yeah, that's where that disconnect was. But you know, I think like in general, product management, it means very different things based on the stage of your company, that's for sure. I think in the early stages, it's typically a CEO founder who has a vision for a product and is going to work with an engineering team, which they may or may not be part of themselves. I'm talking strictly about software here, but work with that engineering team to bring that product to market and ensure that it sort of simultaneously delivers incremental customer value while also staying true to that vision under the premise that there's some bigger prize than just incremental customer value in terms of sort of like addressable market unlock or whatever it is, if you can see that vision through to fruition. Now, you know, as the company grows, you start actually hiring product managers, and that is their job. And I think like different companies have different philosophies on that for sure. So at Twilio, we were very, I think, good in the sense that product managers had a ton of ownership. It was, we didn't think of product management as necessarily like UX or user research or you know, writing specifications or whatever. You would do all those things, but you also had teams available to you that did those things. Your job really was to ensure that whatever we were spending our time on as a company was going to deliver the most value for customers and in return deliver the most value to shareholders, basically, and do so in a way that was aligned with our vision. So it was very much like a business-centric role. You would spend a lot of time, you know, thinking about and writing about incremental revenue unlock and like where you're going to find new customers, how you're going to deliver additional value for existing customers, how you're going to strategically, you know, build products that have strategic longevity in them and things like that. But, you know, there are other companies, in particular consumer companies, for example, where product management might mean more nuts and bolts, user analysis, user research, and that type of thing. So I think honestly, it's a hard discipline to talk about in that regard, because it does come down a little bit to how an individual company thinks about it.
Yeah, totally. And you hit the nail on the head there, even around, I think, less of your realization and more of just where New Zealand is very different to the markets you're used to, and that CEO is definitely, generally, you know, certainly for our earlier stage companies, still wearing that product hat to a certain degree, but, you know, trying to allocate or work out where, you know, their strengths lie, moving more to the leadership as the company grows, and just you know, figuring out whether you're building something that actually solves the problem, right?
Yeah, the way I think about that now, so I have, you know, obviously a product team now, my new company, and I think there's 4 or 5 people on that team. But the way I think about that now is that my job is to sort of own simultaneously the vision of the company, that is to say the impact that we want to have on the world, and sort of the probable ways in which we get there, and then also the product thesis. So at a higher level than sort of the roadmap, it's really the product thesis. That is to say, like, what are the mega macro trends that we're betting on? You know, how will we know if this is working? Where should we be looking for signals that we need to change our strategic direction, and so on and so forth. But Andrew, who runs product, is amazing. He has a group of unbelievable product managers. Honestly, they're much better at what they do than I could ever be. And those folks are more specialized. You know, one of them knows a ton about data and ML. One of them knows a ton about user research and user interface design and that type of stuff. They're all very good generalists. But I think of increasingly of my role as being more about like the product thesis and making sure we're investing toward it and measuring our progress toward it, basically. Yeah,
no, that's a good way of looking at it. A lot of folks have just come from a meeting actually where, you know, one of the key things in the New Zealand community at the moment is talent. Obviously, it's always a key issue, but at the moment, there's a lot of our companies, a number of mine as well, that are just getting challenged by essentially just a demand for a relatively small resource around developers. I know folks would be interested in, you know, what you're seeing your side of the world and sort of where you see all that heading.
Yeah, it's always been tough here. it's gotten, I would say, simultaneously tougher on some vectors. So there are, the talent pool is probably a little smaller than it was. There's this whole notion of the Great Resignation, and there's people who are choosing not to take on traditional employment. I also personally think there's like this unraveling phenomena, and this goes back to like where I talk about product. You're talking about product thesis. One of the macro trends that I'm sort of trying to keep an eye on in that regard is the idea that people are choosing to unbundle the notion of work from the notion of employment. There's, like there are many, many more jobs now that you can do, not where you're not paid for your time. You're paid for your work, and that was sort of fairly strictly limited historically, and now there's a whole bunch, of more jobs that fall into that category as different software platforms enable that to happen. And so I think generally there's a smaller talent pool. On the flip side, it's almost sounding a little bit cliche at this point, but it is still super relevant, which is the distributed nature, like just the fact that pretty much every company built in the last 2 years is distributed by default, which actually has a pretty big impact. And then all these other companies have had to go and figure out how to be distributed. And so I think that does a couple of things. One of which is it obviously opens up a larger global talent pool. And I think my general hypothesis for New Zealand would be that you might want to expect things to get harder, in the sense that if we head further and further towards a global equilibrium on developer salary, it probably still raises the New Zealand salary. I don't know if you've done any contracting recently in parts of the world that you consider to be historically considered to be inexpensive. They're fucking expensive. Getting developers in the Ukraine and everywhere, it's just so expensive. And so, I know that the prices in New Zealand have gone up a lot, but I think it probably continues to go up a little bit. It certainly doesn't crash. And then, and then simultaneously with that, you have just tons of companies with massive developer demand all of a sudden. Companies that weren't traditionally software companies now have to become software companies very quickly because their product is being delivered in such a way that has changed very dramatically. And so the demand for developers just keeps going up and up and up, basically.
And so flipping to your CEO hat for Finn, how are you and your company actually managing that challenge?
Yeah, we grew this year from about 10 people to about 50. So obviously we've added a lot of people. And relative to our size, it's still not that many people. But I'm really proud of the hiring we've done. I mean, I think we hired a lot from network, which is important. We came together to build this company coming from a bunch of other different, more established, larger companies. And I think we're able to ride maybe the Great Resignation trend a little bit to our favor to bring people over from these bigger companies. Yeah. But it does pose a little bit of a dilemma in my mind about, okay, well, next year, if we want to grow by the same amount, which we're not going to grow to 250 people next year, but if we wanted to grow by the same net number, how would we do that? And so one of the things that I have explored is, hiring a general manager in New Zealand and saying, hey, here's some money, go hire 10 or 15 engineers. But to your point, almost everyone I've talked to has said, it's not about the money. It's just not there. You just won't find the people. And, I think that's interesting. So yeah, I mean, I think we will explore purely distributed, fully global teams. I think we'll explore geographic pods in different markets where they are time zone bound to a certain extent, but at least all of the daily collaborators are on the same time zone. And I think we'll continue to explore under maybe certain markets in the US that historically weren't big centers for R&D.
Yeah, no, it makes sense. And it's definitely an ongoing conversation. So flipping over to the human side of things, mate, moving from product manager to CEO, I'm fascinated to hear your thoughts around the challenges with that, the things that are giving you the buzz, maybe the things that you're excited about that you didn't think you were going to be excited about. I mean, it's It's a great move. What are your thoughts around product management, general manager to CEO?
Good question. I mean, I think the one thing that I've enjoyed the most probably is the fact that I spend a lot of time one-on-one with all of my functional leaders. So like, today I spent, just so far today, it's 2:00, but I already spent, an hour with our CFO. I spent an hour with our head of HR. I spent an hour with our head of sales. I have another one of these later. So it's like, I really like actually trying to drive the business through other people who are coming into their leadership, finding themselves at the same time in their leadership roles. I actually find that like really satisfying. It's kind of difficult because you have many orders of misdirection, right? So you're trying to help someone to manage someone who's managing people or whatever, and it can be there's room for lossiness there, but it also forces you to, at least in my mind, forces me to think a lot about measuring by outcomes and measuring by incentives, and completely let go of the idea of micromanaging. Not that I ever would have described myself as a micromanager, but there are many things that I would look at now if I was speaking to myself 5 years ago and just be like, dude, don't, like, why are you wasting your time on that? Just, make that someone else's opportunity to show their ability. Like, just, so I'm always constantly in the habit of asking people on my team, like, hey, if I gave you another $100,000 a month, what would you give me? And, as opposed to like trying to drive very specific processes, behaviors, strategic decisions, roadmap items, just sort of like allowing, first of all, letting that person do the work, honestly, yeah. But also like then being very fair about what's the expectation of the outcome, and then trying to be really fair about holding people accountable negatively and rewarding positively, basically. I think this is really top of mind for me recently because it comes back to remote work and distributed work a lot. And that comes back to our product. Like our product is used by mostly by distributed teams to actually understand how they're doing work across as a team or as an organization across different SaaS applications that they use all day. And so I really think that like there's a lot of, even if you only go back 10 years or less, there's a lot of stuff in management science or in the way that people were managing that are like blunt proxies for what they're actually trying to get at, right? Like the fact that someone is in the office from 8 till 5 is an incredibly blunt object of like incredibly blunt metric for how much value that person is adding to the company. Yeah. But if it's good enough, it's good enough. Now, the problem is all of us, especially if you are an established company and you have other moats around your company, right? You have distribution channels, you have all these other things set up. So you don't actually really need to be, for everyone to be firing on all cylinders all the time. But you can't do it anymore. And so it's almost like we're now a bunch of companies, and particularly like more historic companies, will feel pressure to behave the way that the best performing companies in the world have been doing it for a while, which is like very output based measurement, very clear goals, very clear expectations, clear career ladders, all that kind of stuff. Like everything has to be super clear. It's like, if I'm going to push you hard, it has to be really clear what you get out of it if we're successful. And it has to be really clear what it is that you're actually trying to do. And yeah, so this is on my mind a lot recently. I think A, because of distributed work, and B, because people talk a lot right now about like the 4-hour work week and stuff like that. Sorry, 4-day work week.
I'm keen on the 4.
Well, I guess like my point is, to a certain extent, like 4 days could be like a lot more than a certain person maybe needs to put in if they're really good at what they do. And, but then someone else may, like, that would be like my worst nightmare. I really like working and find it like, certain aspects of it, but find it pretty satisfying. And so, I think like even just the idea of talking about the 4-day work week, you're still implying that you are maintaining this system of basically incredibly flawed performance management that maps time to output.
Yeah.
There are exceptions. And this is where I start to get like morally hung up on it, which is like, well, what do you do if you work at a Starbucks? Like the value of you being there behind the counter is the value you're providing, right? And so does that start to, especially like in certain economies, I might be like rat holing now, but this is what I've been thinking about a lot. So I mentioned like say the Ukraine before, right? Big developer center. So if global developer salaries head towards equilibrium and all of a sudden you have people in Kiev that are making a lot of money, like by a global standard, they're making hundreds of thousands of dollars in a premium currency, euro or USD, whatever. How does that translate to someone who is working in the service economy in Kiev, right? Like there's going to be at best a delay and at worst a mess.
Yeah. Yeah, well, I think it bears thinking about, and arguably we've already seen a relatively recent sort of shift like this in India, right? And I've sort of experienced this firsthand with building a performance management company there, and just literally seeing the salary inputs just double, triple in 5 years in terms of what people were getting paid, and it happened very quickly and caused all sorts of challenges.
Yeah. So I mean, global geopolitics aside, I guess I think like there's a so Stack Overflow released their global developer survey yesterday. They do it every year. It's a great read, but you will very clearly see in there that there's two things people care about. They care about how much they get paid, and they care about how much freedom they have in their job. Everything else, there's other stuff, but like people care about the stack they get to work with, and there's some esoteric stuff in there. But generally speaking, if you're not going to pay what Facebook pays, I think the next best, and you're not. I think the next best lever that you have is how do you give people freedom? And in my mind, the best lever for giving people freedom is building a culture that is very, very relentless about measuring outcomes and or inputs, but at least just being based around units of work and units of contribution, units of value, not necessarily units of time. And that's, I think, like how you compete basically in the years to come. Yeah.
Look, I mean, it is a deep subject, but I think it's one worth every founder thinking about, especially going global, because you're going to run smack bang into it. Either it's coming down here, some of the change, or you're heading into it. And I think the problem we have in New Zealand also very well documented statistically is productivity, which is kind of what we've been talking about in various different ways in the last 5 minutes. And a lot of that, it's outcome based, but it's also about keeping well, I think. And I'm, always ask this question of folks like, there's freedom, but then there's also kind of, the ability to care for yourself and keep yourself in peak condition to provide those outcomes or do those hours of work. Any thoughts around that?
You mean more like for myself, or for like what I would try to breed in an organization?
I give everyone the freedom to tackle it whichever way they both are very important, but everyone likes to answer it differently. Yeah,
I mean, I think for me, actually, this would have been a good answer to your previous question as well about like coming into a CEO role and what's really fundamentally different about it. Actually, I tend not to think through this lens a lot, but if I was being really deeply honest and personal about it, I'd probably say the biggest difference is the athleticism. It is, I've been in roles before where, so like even as a general manager to a certain extent, like if my team launched a great product once a year, there was 5 or 6 other business units to fill in the other, whatever. And, and then of course, like we were a growth BU and there was others that were, driving revenue, but weren't growing, and so on and so forth. So there's, you just sort of, things balance out. But I have been in roles where you can get by or even succeed. Sales is one of these roles. And I think defensively, it should be one of these roles where you can survive and thrive through infrequent acts of extraordinary accomplishment, basically, right? It's like if I close a massive deal every quarter, I'm good. And I think the biggest change for me, honestly, coming to the CEO role is like, it just doesn't work. There's always someone who needs your attention. There's always something that's going to get dropped on the floor. There's always, it's just a very athletic feeling thing. And I wasn't ready for it, honestly. And I got like I think it got me a bit depressed at first because I just knew I wasn't living up to it. Like I just knew I wasn't doing it. And I think, you know, at a certain point, it became real enough where I was like, well, dude, you have to fucking do it. So, you know, I just worked with myself to figure it out. And, you know, a lot of that I think is wellness stuff. I'm definitely much more, I wouldn't say I like am super anal about like diet and stuff like that. I definitely exercise a lot, but that's really more because I enjoy it. But I'm much more anal about sleep than ever before. Like this notion that you can work a 70 or 80 hour week is horseshit. It doesn't exist. Nobody, you can be at work for 70 hours a week. I would believe that. But like, if you actually want to be doing high leverage activity and do it week over week over week, which you need to do 52 weeks a year, essentially, you need to be sleeping a lot. And every morning needs to feel like a new morning, not an extension of the previous evening.
Yeah, no, that's great advice. Hey, we're going to take the questions that we've got here. There's 3 here. I'll just guide you through them. Question from Max. G'day, Max. Finn hires remote, but in the US only. What is the rationale for limiting it?
So actually that's changing. We, like I said, when I came in earlier this year, there was not a lot of anything. So we had a small handful of engineers, and we had, we didn't have like a dedicated sales team. We didn't have product management. We didn't have a lot of things. We didn't have designers. We didn't have brand. And so I think our strategy for hiring for this year was very much focused around speed over other, you might say that like your vectors for thinking about hiring is like speed, quality, and cost. And there's probably other things as well, but those might be your 3 major. And for us, it was like, we just need to hire very fast. And so all of us have quite a bit of experience hiring in the US, and we know how to manage people in the US, and we had a legal entity in the US. And it's, the notion that like, let's go and do something, even though we know it's the right thing to do, the notion of like going in and yak shaving essentially like was undesirable. But we actually have our first Canadian employee. We're going really exotic on this one, starting in the next couple of weeks. And then I think from there on, the cat's kind of out of the bag, because in order to do that, we have to, you go from 0 to 1 in terms of not using US payroll services, not using US benefit services, and all this kind of stuff. And so it becomes like relatively simple, basically.
Yeah, cool. And this question from Simon, sort of driven from the same area as Max, actually checking out Finn's website and just complimenting you on your About Us pages and talking about top people is normally the thing, but you featured a new employee. I think that is a great question. How else do you actually inspire excellence in each other?
So Chandrika is on that page. She's awesome. I mean, like, and I think she's just sort of exemplary of someone who came in like relatively junior. She's had an engineering role before, but not at a tech company. And, she's crushing it, super curious, super hardworking, and super good communicator. So it was a sort of a no-brainer there. I'd love to have like more profiles up, but honestly, we only built our website like 2 months ago. And right now, like there are large slots of it which are no good. So like we will come back to the About Us at some point, but right now it's like, when your product page is suffering, you probably want to work on that first to a certain extent.
What heaps to do.
In terms of inspiring excellence, I think like the only so this actually comes from LinkedIn. So our sales leader came over from LinkedIn, and we had a whole conversation about like what our different values should be as a company and our rituals. And one that came up a lot was some version of do really good work or something like that. Take pride, or there's like all these various incarnations of this theme. Have high standards for one another. And his rationale on this was that they circled around a few things at LinkedIn and landed on Inspire Excellence because it puts the impetus on you as a leader and a manager to actually work hard, basically, and sort of like set the pace. So I think, yeah, this is one that's super important for me, where I actually feel very comfortable pushing people hard if I'm pushing myself hard as well. If I'm not pushing myself hard, I get deeply uncomfortable pushing people hard. I feel like very much like an imposter, and like everyone knows it and can see it, and it makes me like very, very uncomfortable. And so, and I notice it like not just like I notice that on a day-to-day or week-to-week basis. I can feel it creeping up. And so I think the notion of Inspire Excellence is really just a message to everyone in the company, but especially maybe also to leaders, which is to say, like, expect excellence, but the way you get it is by demonstrating it. And if you're demonstrating it and other people aren't mirroring it back to you, then you have a reasonable grounds from which to say, like, hey, I think we have a problem here. But if you're not putting it out into the ecosystem and you're expecting it back, you're just going to breed a lot of resentment. You're probably not going to get a great result either. But plus, like, it's just the right thing to do. Like,
yeah, it's a great answer. And I mean, I was going to ask you a deeper question around culture, but I think, to me anyway, and feel free, community on the Zoom here as well, if you've got any different aspects of that, so important. But yeah, it's sort of turning those truisms into something that actually fits the company and that you can demonstrate every day, right?
So I've been thinking a lot about this as well. It's funny, like, most companies have like a set of values or whatever, and they just like hang on the wall or whatever it is. And Twilio like did I thought a really amazing job of, whenever you were in a meeting and there was a decision to be made, or you're arguing about something, whatever it was, someone would quote one of these values, because they are essentially like memes. They were like so memorable, and so like it was so like clear how to turn them into action, that they just would come up all the time. And it's funny, like, I was talking to my team last week about like what I expect from them, as sort of an exercise. And one of the things I actually quoted from someone else, and I said, I expect you to be chronically discontent with the state of your business and the state of the company. And everyone was like, well, that's a bit negative. Like, we shouldn't put that in, because we're writing a document. Like, that's a bit strong. Like, it's a bit harsh, whatever. So I think we reworded it to sort of, I can't even, this is exactly my point. I can't remember what we reworded it to. Something like perpetually unsatisfied, or some crap, some, watered down, whatever. And anyway, since that meeting, I've heard the term chronically discontent like 10 times. And I'm like, okay, that's it. We're keeping like certain things just stick. And I think when you identify those things, it's worth codifying them. We also have, other values where I'm sort of like, we should probably just ditch this because no one ever talks about it. Like, yes, it's the right thing to do, but if it's not memeified and you're not throwing it at each other all the time, like, does it really add any value?
Yeah, I think it's so important. It's so important for customers too, right? I remember my first business, Sonar 6, with Mike Carden and Mark Hellier, and we ended up with a tagline, people want us to be the premium HR solution, or this and that. And every CEO I talked to, explaining within 5 minutes what their performance review process was like, just said it sucked. And they literally said that. And so we ended up with performance reviews that don't suck, literally because the other stuff just went into memeville, right?
Yeah.
Very important point, authenticity. Glenn Lee has got a question. He's impressed with your points about sleep. How does a CEO live a balanced life, especially considering the demands of the job? Great question.
Well, I mean, I probably differ from some people here, where I'm not looking for a balanced life right now. I'm looking to not be thinking about work-life balance in some number of years, basically. So I'm not suggesting everyone should have that outlook on life, but I am perfectly happy sprinting as fast as I can for a short amount of time. Not a short amount of time, but some amount of time, in order to set myself up for a more leveraged situation later. So I don't know that everyone would look at my life and say that it's the most balanced thing in the world. But at the same time, we have leaders on the team that are, very staunchly protective of their family time and like all that kind of stuff. And I think in general, like everyone's very supportive. Like as long as the work is getting done and the goals are ambitious enough and they're being hit with some amount of reliability, I don't think it really, for the most part, I think we just try to be flexible, and most people put time on their calendar just every day for family time, whatever it is, and you just know not to schedule over it. I don't do any of that.
Great answer, because it's the answer that's actually true.
Yeah. But again, it's
not
not
the
like
one that a lot of
CEOs
CEOs think they have to tell.
Yeah, it's not like I feel any pressure to do that. It's just it just makes sense. I think if you can get into, software is the greatest industry that's ever existed from a financial perspective in terms of, no unit cost, no cost of reproduction, basically 100% margin and global audiences. So if someone gives you a seat with a legitimate opportunity at that industry, I think you take it, basically, is kind of my take on it. But again, a lot of people are very successful in software and much more successful than I am, taking a very different approach. So,
yeah, no, very cool. Question from Richard Chew. G'day, Chewy. Now you've asked the question I was hoping someone could ask, because I'm sure a lot of you on this Zoom are thinking about it. Great journey, Evan. Can you tell us more about your cap raising process from start to close?
I can, but it's super, super non-instructive. It's like it's probably not a lot of value in me talking about it. It was so for everyone's sake, like our company was started by not me. It was started by Sam Lesson, who's the first product leader at Facebook. He's a general partner at Slow Ventures, very successful investor, and a guy called Andrew Cortina, who started Venmo, which is kind of the de facto peer-to-peer payments app in the US. And they actually were trying to build a consumer product. They ended up building some back-end tooling that they were very enamored by and were sort of like, we should sell this. So they pivoted the company and recapped essentially and just sort of started fresh. And that's when the search for B2B enterprise software CEO and other leaders started. At that time, the product was overperforming in terms of the amount of revenue that it was driving versus the amount of money that we had raised as a company since the pivot. And so it actually was a relatively easy fundraising process. It didn't hurt that Kotu was the company that recruited me to run the company. So it was almost like it created sort of like a contingency where it was like, okay, well, you're telling me you want to hire people to run this company so you can invest in it. So, that creates a very different dynamic, obviously. I think like from what I see in the, but I guess on the flip side, I do a lot of early stage investing. And, I think what I see right now is that everything is still insanely frothy, crazy valuations at very early stages, pretty fast closes with very little diligence, which I think is being driven by Tiger and a few other companies that have taken a sort of limited diligence model, and that's trickling down through all the deals. And but I don't know that it's gotten a lot easier to raise at later stages. Later stages are much more rational and always have been. They're typically based on multiples of revenue and things like that. Whereas early deals are based on vision and what we see this could be in the future, and so they tend to have a little bit more margin for exuberance, if you will. But yeah, I mean, my fundraise was pretty easy, honestly. I don't want to say that it's never easy. There's tons of logistics, there's tons of whatever, but it was like at least my timing coming in, it was not too difficult. It was mostly about sort of, here's our vision for the industry. Here's why we're different. Here's our success so far. And, we just were very fortunate to have logos like Airbnb and Coinbase and like these very leading brands that we're able to use as reference customers. And I think the whole story came together in a pretty strong outcome. Yeah,
well, I mean, the gem I think from that is really that your company was overperforming based on the amount of money invested, right? So that's really
because they've been building this product for 5 years under a completely different set of assumptions. So it was a back-end tool, but it had through that time, like many years of R&D input into it, and then, pivoted the company, bring on a few big customers, and all of a sudden it's like you're out raising an A round, but you have logos in your base that you wouldn't normally see until a much later stage of company. And so, yeah, I mean, any time, there's magic numbers that investors look at. The one that you hear all the time in SaaS in particular, I'm sure you're familiar with this, John, is like triple, triple, double, double, double. And as long as you can go like 1, 3, 9, 18, 36, 72, like that basically means that you're set up to proactively IPO at 100. I'm talking about like annual recurring revenue. And so like if you can hit on that sequence at the beginning, the amount of detail that financial detail at least, that needs to go into a pitch is lessened. Yeah. Because people are pattern matching on that triple, triple, double, double, double.
Yeah, we see that a lot. Quick one there from AB. Any tips on buying your 3-letter domain?
I could acquire the company. We could structure a deal, but other than that, I don't think that one's going to work. I like the other question though, if we have time.
Yeah, of course, you can read it there.
So how do you strike a balance between cash cow product revenue streams and growth streams? This is referring, I think, to my comments about my previous company, where I was not necessarily the decision maker on that stuff. It would be funded from the corporate level, and we would just receive envelopes of money, not literal envelopes, but financial envelopes. So I think that's a question that is very perennial, probably, and probably also very relevant, not just in software, but in all businesses. And I think, like, honestly, it's kind of a business schooly answer, but at a certain point, it comes down to like capital deployment. You're just trying to deploy capital in ways that make more money than other ways you could deploy the same capital. And so now, granted, like once the money's inside a company, it's very unlikely you're going to deploy capital outside of the company. Although Salesforce, for example, has a venture fund and they deploy capital outside the company. So for them, it might make sense to invest in a startup rather than trying to build it themselves. And so, but I think that's the general principle. However, I do think like there's a few more nuances to that. One is, what can you build that leverages what you've already built in such a way where you don't have to be as good at everyone else as all the other things. So I mean that specifically in terms of new product development. If you're thinking about building a new product, you have to assume that there's some other company out there that is dedicated to that product, that is just building a product like that. And they are probably better than you, and at least further along than you, at 95% of building that product. You need to have the insight as to why it is that the 5% that you're going to do differently is uniquely unlocked by what you've already done. And that's like, generally speaking, that is a clue that the capital allocation is appropriate, right? Because you're taking latent value in something you've already built, and applying it to something, to some net new thing. So I think like that's a pretty good rubric. And then other than that, honestly, I think a lot of it is just guessing, seeing where the market's going. I actually think a much more interesting conundrum is like, acquiring companies versus building products. That's like something where you look at a company like Salesforce and it's just like an acquisition engine, because they know how to sell so well that they can just go and buy all these little companies and turn them into massive businesses. But yeah, I mean, I think in terms of your growth businesses versus your new businesses, it just comes down to model it out over the next 5 years and figure out like how much you're willing to spend on each, because your base business is probably going to give you better ROI in the short term, and your growth business is going to give you less guaranteed but higher ROI on a longer term. And so just model it out and see what you can stomach, and figure out like whether you're going to have new capital coming in as well. And yeah, I don't know. That's a tough one. That's kind of a business school problem, I think.
Yeah. No, it's cool. Now, Luke, I know you've got a question now. I'll have that one, I promise, mate, as the first one when we break about 10 minutes before the close. But I always get to ask one of my own questions because I'm doing the questions. And I'm just intrigued about Finn and, a couple of elements. One, kind of what I'm hearing, a pivot around an original thesis to something new that really, sounded clearly like it's got a lot more addressable market, a lot more growth opportunity, but also just in terms of what you do. I'd love your thoughts on sort of the categories that are evolving above, what starts out as individual solutions, and then suddenly there's a problem to solve by aggregating or bringing that stuff together, which I'm just fascinated about as a new opportunity.
Yeah, I mean, that's in some ways that's like kind of the fact that I've had that. Yeah, we'll get to that, but that was part of my decision making to come to this company. So, in terms of the pivot, I think to say that we have a bigger TAM or bigger growth opportunity is probably it's not that it's wrong, but the original idea had a gigantic TAM. I mean, it was a consumer product, like essentially a digital assistant type product like Alexa, but where you have machines triaging problems and then assigning them to humans when they become too difficult or whatever. And so you could say, Finn, book me a flight from San Francisco to New York, and I don't want more than one layover, and I don't want to spend more than $500, right? And by the time that gets to someone's desk, it's kind of decomposed, and they just solve it, and so on and so forth. And so you can imagine how our tool was built when you had 600 people sitting around doing tasks like that. So it's a pretty big TAM. It's just a consumer product, and consumer products are, at least in my mind, because I'm not a consumer person, they're very fickle, and you either get it right or you get it wrong. And if you get it right, you make boundless piles of cash, right? And if you get it wrong, which you do more often than not, you really get nothing because it's not worth running it. So there's not many small business, I would say small business consumer technology products. Let's put it that way. They're either blow up or you shut it down because it's not, move on to the next thing, better use of your time.
Yeah.
So I think it's just a very different business problem. Whereas, B2B SaaS, more iterative, more formulaic, more based on listening to customers, more based on quarter to quarter growth, as opposed to gigantic explosive growth that might happen in concentrated periods. So much more my speed. I understand that type of business a lot better. You mentioned the fact that Finn kind of works across SaaS applications or kind of pulls things together, and it is a really interesting space right now. So a company called Workato just raised a lot of money. They do kind of like Zapier sort of, but it's workflow integration. So pulling from different systems to complete workflows. Honestly, I don't know their product that well, but they're called Workato. They raised a lot of money. And there's a lot happening here. So I think the macro that is interesting to me is that enterprise software used to be incredibly hard to sell. If you go back to 1978 or whatever with SAP, or you come maybe slightly more forward into the 90s, it was like, we are a Microsoft shop. We buy our software from Microsoft, right? And everything you use is from Microsoft, and that's how it was. And then all these different macros come together. You have cloud computing, you have advances in the browser and advances in software development in general and testing and all these dev tools, and all this stuff just comes together, and then combine that with Stripe and how easy it is to take global credit card payments and all this stuff, Zendesk, do support, whatever. And it just means that all of a sudden you can have a viable B2B software product with 5 people building it. And that just would never have been the case. You might have been able to build some utility and sell it through, right? I'm going to build a utility, I'm going to have SAP sell it for me to their customers because it works with SAP. But in general, you weren't going to just get straight into some company. And now what you have is at least over the last 10 years, an unbundling of these core enterprise applications. So instead of having just a CRM, you do have your CRM, which is your system of record. You also have your CDP, your customer data platform. You have your Gong or whatever you're using for your sales training. You have, I think the average enterprise has something according to Okta, about 130 SaaS applications that they use. And so you end up with these best of breed applications across the enterprise. And that just creates a new and novel and equally massive headache, which is how do you manage all of them? How do you know that they're being used, that they're not shelfware? How do you sort of make sure that they're secure, that people aren't leaking data out of places here and there. So there's all these like different challenges that I think arise from the fact that you unbundle. I still think unbundling is better net than monolithic software that's provided by monolithic vendors. Yeah, there's a lot of opportunity, I think, in the idea of how do I help a company to navigate this like crazy space that we've basically all entered ourselves into.
Yeah, and it's just growing, by the day, right? And also customer service is suffering because of all this disparity.
Yeah, I mean, it's ironic in a sense that like a lot of the category now in SaaS is like CX. Like there's so many CX tools, right? And great, there should be especially. That was one of the first things I noticed moving to the US is you just deal with really big companies, and they're, the first time I had to deal with AT&T or something, I was like, this is awful. This is horrible. And so I think like the creation of these CX tools is great, allows more contextual customer interaction. But yeah, you get 10 of them, and then what have you done to your CX?
Yeah. Sure, we've all experienced it ourselves on the consumer end. Pretty frustrating. We've only got like 9 minutes to go, so I'm going to jump to Luke's question. And folks, if you've got any other questions, we're coming down the final straight, so it's your last chance to fire them out. Luke, always the opportunist, is asking, what kinds of companies do you invest in? Stage, industry, location, etc.
Yeah, so I think like stage is the only one that's easy to answer, which is seed. It's very expensive to try and invest in companies post seed unless you're an institution. So, seed investing checks up, sort of between 250 and $1 million, and it's not personal money, by the way, or not always. Location, don't care. I actually personally, my personal thesis, and this is going to sound, I don't want it to sound rude to people that are probably not on this call, but I actually really like first world English speaking markets outside the US. So I really like New Zealand, Australia, the UK, Ireland, just the ease of doing business, the familiarity of the meeting the founders and understanding whether I gel with them or not. But also I think those markets are just really underserved for capital compared to the east and west coast of the US. And so I like those locations. And then segments, like I really only think about B2B because that's just what I know. But increasingly, I'm kind of thinking that maybe that's not what I want to be doing. Consumer stuff is super interesting. It's just I'm sort of consumed with B2B all day at work. So maybe I would consider other things. But actually, I really like IoT, industrial IoT. I really like anything that takes a real world process based on estimation and turns it into a process based on knowledge and accuracy. So like, for example, invested in a company here in the States called Pulsa, Pulsa. They sell software and hardware that enables gas distributors essentially to massively reduce the amount of trucks that they're putting on the road, because instead of going to fill all the restaurants on a Wednesday, you go out every day, but you only go to the places that actually need it, right? And there's all these problems across the economy everywhere. And, you just don't see them until you start thinking about them. But I do think there's going to be like quite a bit of innovation in IoT, but someone said traveling salesman problem. Exactly. You don't need it anymore though. Like that was, again, talk about like crude proxies for measuring things like that. My trash gets collected on a Wednesday. Why? Because that was like the best guess as to how often everyone would fill up their trash can. Sorry, rubbish bin. We've
got subtitle.
So, but like there's all these proxies for data and for accuracy exist all across the economy. So I really like that sector, but I do this with a few friends. We'll look at anything really. So you can actually email me. It's just my first name at my last name.com, evan@cummack.com. And I'd be happy to talk about it.
Yeah, well, there you go, Luke. His second question, ever the opportunist.
I will say my one caveat, well, not caveat, but my one concern about investing in New Zealand companies is, and correct me when I'm wrong, John, but a lot of the companies I talk to or have talked to have a tendency to drag things out. I'd rather invest in something and then have it fail and then invest in your next thing. And I worry that there's some sort of external pressure, I don't know what it is, that creates this environment where people will nurse ideas. I think in general, software ideas tend to work or not work. That's not always true, but like in general, and companies do pivot, but when they pivot, you'd say, well, that's a new software idea. And then that new software idea tends to work or not work. And it's just such a magical industry with such insane economics that my personal philosophy is like, find something that works and just get behind it and if you find something that is not clearly working, you could be working on something that is working, because there's just so much opportunity. There's so much white space. There's so many things that are still done in such incredibly old-fashioned ways that are going to be revolutionized by the cloud and by software, that it's like, let's move on, let's try something else, and let's go for big multiples.
Yeah, I think that's great advice, and I think something really to reflect on, not necessarily for the people on this call in New Zealand, but the New Zealand ecosystem is, your most precious asset is time, right? So working on something that just isn't showing those signs, and just having the courage to flip around and look at something else. There's plenty of stuff to solve.
There's infinite stuff. Like, especially once you start considering, I don't know, like if you go outside of consumer and go outside of enterprise and you start looking at industrial, and like there's a reason it's hard to hire engineers, right? There's not enough people building software for someone.
You're bringing the star up for the last couple of minutes, mate. Hey, Evan, it's been great to chat to you. We're rolling up to 3 minutes left, I guess. Well, there's one more question here that's slipped in, is it? Can we see the dog? I see you're already. Yeah,
that was what I was responding.
You're ahead of me.
Should be a bit later. Come.
Yeah, the dog's been the star, mate. I mean, you've been good, but the dog has been exceptional. So look, rather than the generalisms, rather than the memes, you're a founder. You're sitting in New Zealand. You kind of know.
I'm not a founder. Actually, you're talking to the audience. Yes.
Yeah.
Sure, sorry.
Yeah.
It's always about me, John, as you know.
Yeah, I know that, and you know me. I'm often happy to just correct you when you're right as well as when you're wrong. Okay. But what's the perennial stuff that you see that you could leave this group with, regardless of what stage they're at, in terms of turning something that was an idea into something great, whether you're the one who came up with it or one of the key people actually delivering on the promise and the vision.
I mean, obviously it depends on the idea. It depends also on your own abilities. But I do think like it's fine if if you're not a coder and you have an idea, that's fine. But the less non-coding people that you have around early on, I think, is probably a good sign. Especially if you're taking like investment money, the investors are not going to necessarily feel great about the fact that you have 1 or 2 people writing code and 7 people, doing strategy or, whatever. Like and so, I'm not a software developer, but I do pretty strongly feel that like if I was going to start a company from scratch right now, I'd want to help build the vision one. And it's not that hard. I mean, it's not easy, but like there's web user interfaces, there's mobile user interfaces, like there's a lot to do that's not just writing back-end high availability distributed systems code, right? So I always think that's a good indicator, is just like if everyone in the company early on is pretty productive at driving the product through to availability. But it's also not always the case. I think like if you have reputation, you can easily escape from that as well, right? If you're Mark Benioff and you just left Oracle and you're starting Salesforce, like no one cares if you're writing code or not. But I think if you're coming from a place where you don't necessarily have that behind you, then it's a good message.
Great advice to wrap up. Really happy to be able to do this, and thank you for your time. Thanks, community, for watching. I'm sure you've got a bunch of stuff out of it. Tell your friends. This will be on demand in about 90 minutes. You have a good holiday season, although I know your balance is out to building something great, and I hope that all goes well for you as well. And thanks again for joining us.
Thank you, John. It's always good to see you. Look forward to picking you up off the streets of San Francisco again sometime soon.
Yeah, I'm glad we didn't cover that in the main webinar. You stay safe, mate.
See you later.
Yeah, everybody. Thanks. Bye.